Quick update today. It's October 24th, Thursday, 4:15 p.m. Eastern Standard. My name is Chris with Commodities Capital Management. Did a quick rebrand earlier today, and the reason being is we want to start to really treat this like a commodities management firm. So going into these trades, I really want to make sure that my mindset is that of a trader, that of somebody that's managing a significant amount of capital. And, down the road, that might be managing other people's capital. As of right now, it's just managing my own portfolio and sharing these updates. These updates are helpful for me to really think through what I'm doing, why I'm doing it, and having to really justify the positions that I take and the things that I'm in. So you can join us on the Discord. The Discord link will be in the description. Well, let's talk through the positions we are currently in and our current thesis. So we're in a very risk-on portfolio right now. I actually designed a little bit of a ChatGPT prompt to figure out and provide me with a risk assessment for my trading portfolio. So whenever I've got more than a handful of positions on, like we do now, we want to run a risk-on versus risk-off score. So how risky is the portfolio, and then based on macroeconomic trends, how risky or maybe more risk averse do we want to actually be? So right now, with the election coming up, with stuff going on in the Middle East, with kind of this flight to safe haven currencies, silver and gold really taking off. The US dollar has been finding a good reversal lately. We're in a very risk on environment, right? Stock indices are at all time highs or very close to them. The Russell had a little bit of a correction over the past couple of days here, but we're not too far off from highs. I think the S&P hit a high maybe 2 days ago, 3 days ago. So we're in a very risk on environment. Things are just going up. Inflation likely to start ticking back. Jobless claims came out earlier today. Numbers are looking good, lower than expected. Things are good, right? Things are going to continue to move up, so it seems. Nasdaq's recovering 1% today. Things do look very good. So we're looking for a risk-on score of about 7 out of 10. And what positions are we in right now, and how does that score break down? Right now, our portfolio is about a 7 to a 7.5 out of 10 risk-on score. So positions we are in. I've gone and taken another stab at crude oil. So we entered earlier today around $71 in crude. We're also in on natural gas long. So we pivoted from our short into a long position given the commitment of traders data that came out. And given today's news failure, there was a larger supply of natural gas, which should theoretically lower prices given supply and demand. If we have more supply, that would theoretically decrease prices, but we saw prices actually rocket up about 10%. So we're long natural gas given the news failure and the commitment of traders showing speculators very heavily fading and shorting the current price. Other positions we're in are currency trades. So the Aussie dollar, we're looking at continuing to short this, and it's had quite the move down. We have the South African rand, very similar, quite the move down, but a bit of a recovery today. I think that was due for a correction given we lost like 1.5% yesterday, but still looking very bearish to me. And we took profit on the yen today, as the yen's up about 0.5%. US dollar is down almost 0.5% here, so that's probably pretty correlated. But we're out of the yen. We took profits, had a really, really great trade there, what I would classify as a home run trade for the yen short. So we're in on the Aussie dollar. I'm also in on a small position on live cattle. Took it a little bit preemptively. We're starting to tick up here a little bit. I do think we're going to run into resistance, and at some point this is going to roll over, given seasonality, given the commitment of traders, this being heavily stacked to the long side. This is likely going to start to roll over and head lower. It's just a matter of when. So figuring out how to time that and get in on a good position before we miss the move. And I'm in long on the NASDAQ. So the NASDAQ, more of a momentum play as we continue to ride this thing up, and actually looking to add in on the position if we get any further downward pressure. The only other positions that I would highlight that are worth mentioning here are silver and gold. Silver is at over an 11-year high, and I would like to get in if there's a deeper correction down to about 32 and change, which I don't think is outlandish. I think we could probably get back to the scene of the crime where the breakout started before the next leg higher. So I'd like to get back in on silver. And then palladium is ripping higher here, and there's no fundamental news. Volume's actually been very light up until today. We saw about 200% trading volume today as this thing ripped to recent highs. If we look at the yearly chart, the year high was actually about $1,250 something dollars back in December of last year. We've since then we've ripped all the way lower to about 860, and then it ripped higher and found a resistance at 1113, headed all the way down to 810, and then it found resistance at 1120, went back to about 980, and now we're up at 1160. I think the high on the day was about 1180. 1173 was the high on today. Quite the interesting moves here. Palladium, for those of you that don't know, is a current, or it's a metal that's used in catalytic converters in cars. And as we know, with the rise of electric vehicles, this may not continue to have a lot of relevancy. So I like to short it when it gets too high, closer to 1200, and I like to be long when it is sub 900. Right now, we're getting close to a short here, but it's hard to short. And I actually took a short and lost some profits earlier. Week. It's difficult. It's difficult to time this thing. It's very volatile and it's all over the place. So right now we're going to stay on the sidelines and look for some sort of a corrective bar here before we would consider going short. But worth pointing out. And then the other chart, last thing I'll point out is Tesla here. Monster earnings up 22% on the day. Not only did we fill the gap down from the 1010 robotaxi event, but we've broken back above to these near swing highs on 1 day of movement from around $212 up to 260 with a 22% gain. Just a monster day. If we can get a close above 270, this thing's probably going to take off, and I can see us getting back above $300 in the very near term. So chart's looking nice and bullish on the daily here. Obviously, there's a lot of gaps in the chart. Not the cleanest chart to look at, but man, this is a good that's a good rip here, and they had some really good earnings. So we're going to continue to watch that closely. We're a long-term holder of Tesla. We don't trade it, so yeah, we'll keep an eye on that. But that's it for today, and we'll talk again likely on Sunday, since tomorrow we get commitment to trader data, and we do not trade on Fridays while we wait for the new data to come out. So we'll talk Sunday on potential setups, what we're looking at, and we'll go from there. Thanks, guys. Talk soon.